On chat. We are live. Welcome to Networking with Nathaniel. Curtis isn't supposed to be here yet.
Let's go.
Well, there was a little hint who the guest for today is. This is a podcast where I get to talk to movers and shakers in their industries, entrepreneurs, business owners, people that are growing. We come here, we learn from the successes, we learn from the struggles of these people that come on and are willing to share not only their time, but their knowledge and their resources with us. I am Nathaniel Hefce, host of Networking with Nathaniel. Go figure. I am a husband, a father of 3. That is the most important thing in my life, being a husband and a father. Well, after God, I guess. My phone's ringing over here. I am a health and wellness coach for busy men. I help men to unlock their energy, their focus, their clarity, their confidence from the inside out. I'm also a real estate investor. I've done millions of dollars of deals in my real estate career so far, but this show is not about me. This show today is about the person that you just got a sneak peek from. Before we get to introducing him a little bit more, though, if you're not already subscribed to the channel, subscribe to the channel. This channel has a lot of value on it. We have a lot of amazing guests that come on and share their experiences. And we're going to be dropping more health and wellness content just to get you unlocked in that aspect of your life. My guest today, who you saw, Mr. Curtis Ray, is founder of MPI. He is an entrepreneur. He's also a high-level athlete. We were just talking about it before. I'm just going to bring you back up, Curtis. We were just talking about how you're running sub 550 miles. Not just one time, though, many times in a row. And that is incredible because most people never even think about breaking 10 minutes in a mile, and you're doing it in almost half the time.
Yeah, running.
That's not what the show's. Yeah, that's it. I appreciate you for being here. The getting, usually it takes a second to like start the live, and I was not prepared at all. But thank you for taking time out of your busy day. Would you just tell everybody, kind of give a really quick, better introduction than I did?
Yeah, my name's Curtis Ray. I live in Gilbert, Arizona, married with 5 children. So being a father and a husband is very important to me too. I take a lot of my energy and provide this knowledge and power to the world of how you become financially free and how you become physically free. You know, whether it's your health or your wealth. Wealth means nothing without health. And although I'm really obsessed with compound interest and making money and building your financial future, without the health aspect of it, it's all for naught. And so when you combine those two, I believe that's the single path to happiness, the single path to living your absolute best state. And so love being here, love talking about it. And I've lived a long, not that long of a journey, but I've been through a lot, and I really love talking about it.
Yeah. And we started talking before the show that I'm not going to I don't want to get too much into the journey of what got you here so much, because you've talked about that, plenty of times. People can go research that, and you should, because the journey that got you to the MPI, which was awesome when I heard you talk about it in person at that golden ticket event, is really empowering. What you've done, you've basically brought a financial tool that was exclusive to wealthy people to anybody through the strategies that you kind of employ in your business. Employer. What can you tell me, just like kind of high level or low level, depending on what your perspective is on that word, what the MPI strategy is all about? And I guess maybe we need to start with, what is infinite banking?
Yeah, it's so important to understand that it's really easy to make money. A lot of people are out there working hard, they're making money, but what you do with the money you make is equally important. And normal everyday Americans, they save money. They save in the bank account. They save in the 401k. They save in IRAs, wherever they're saving, but they only have their money working for them. What the elite, what the rich do, is they have their money working for them, and they use a simple thing called financial leverage, where they have other people's money also adding over, spilling into their wealth. And that's the fastest, most easy way to become wealthy, is use your money plus someone else's money to go make wealth. Unfortunately, there's risk involved with that. You're using someone else's money. They've got liens on you. You have to pay interest. There's risk of the market. There's a lot of things that go along with using financial leverage. However, as you just mentioned, there are a few financial tools out there that allow you to have both. You can have some really great security while using someone else's money simultaneously. You add those two things up together, it's this phenomenon called compound interest, where you're just accelerating faster and faster without traditional risk. And so we've been able to work real hard. And, I had a really bad day back in 2014. And I said, where am I going to save my money now? I need somewhere that saves money that doesn't lose, because I'm really good at making money. I'm even better at losing money. Like most people in this world, we make a lot of money and we work hard and we save it. And then boom, 2008 happens, COVID happens, various things happen. And then we kind of shrug our shoulders, lick our wounds, and start over. Well, I got tired of that journey. So I said, you know what, how do the super, super rich not end up like losing all their money all the time, every time the market dips? And we discovered some really cool things, that when you're rich, you have exclusive opportunities to strategies that don't lose money, are tax-free, allow you to use other people's money simultaneously with your money, and you mix it all together, and this really amazing thing happens. But you have to be really rich to even participate. And so in 2018, we took some time and we said, how do we build that so I can use it, so that you can use it, so that my friends and family and community can use it? And after about 4 years, we built MPI, and we launched to the public. And I believe it's the single best strategy I've ever seen. I personally use it myself because it mixes in the tax-free, secure, leverage, all that stuff. And I've made more money in the last 7-8 years of my life than I did in all my businesses previous to that.
Yeah, that's great. I'm not sure what happened. Curtis disappeared. I'm guessing he's going to come back, but we will see. Okay, so I'm going to try. There we go. That was interesting.
Oops.
Yeah, I forget what his name was. He pulled the plug.
Boris.
Yeah, Boris. Okay, I lost there was something you said there at the end. In the last 7 or 8 years, you've made more money, right? You said something at the event that I thought was interesting, and I don't want to mess it up, but maybe I can kind of give you an idea that you were saying that like every 7 to 8 years, the world's net worth doubles, something like that. Is that ringing a bell?
Absolutely. So right now in the world, there's $450 trillion of wealth. That means if you add all the real estate, cryptocurrency, stock market, everything added together is 450 trillion. And automatically, just through the natural orders of economy and the universe and abundance and whatever else you want to call it, the wealth is doubling every 7 to 10 years. So that means by 2035, there will be 900 trillion. By 2045 at the latest, there'll be 1.8 quadrillion, then 3.6 quadrillion, then 7.2 quadrillion, then 14 quadrillion. By the time you and I pass away, there'll be 20 to 50 quadrillion dollars of money in this world. And right now there's 450 trillion. I mean, it's the tiniest little sliver of bucket. And those who understand that all you have to do is start making little, simple, good financial decisions today, and you get to participate in that. A lot of people will just say the rich get richer. It's not fair. They've got better opportunities than me. No, we all have the exact same opportunities now. Now that financial leverage is available to the public, now that security, tax free, all the things, your only job now is to participate. Be an active participant, making it a part of your lifestyle, and you inevitably will end up part of this compounding machine that brings wealth to anyone who just says, I want that. I'm going to do the simple little good decisions to participate in that. And you will look back in 10, 15, 20 years from now and say, single most important decision I've ever made in my whole life.
Yeah. Maybe, well, we won't go there. I was like, maybe getting married, baptizing. Okay, but yeah.
But see, but what I'm saying is it's all part of the same, because getting married requires this exact same process. Getting baptized requires the exact same process. It is slow and steady, making little good decisions. You don't need a home run. You don't need a grand slam. You just need to go find someone that you're compatible with, that you make good decisions with. You're building memories. You're building connections. You don't need to go have that. We've all felt infatuation before, right? And it often doesn't last very long. But the ones that you actually connect with and you build a foundation, you build security, and you start building slowly. The phenomenon of compounding is not a money process. It's not a money concept. It is an abundance, infinite process. And when you understand that, you apply it to your faith, you apply it to your relationship, you apply it to your health, you apply it to your wealth. And the moment you embrace the idea of slow and steady, keep moving forward with simple little good decisions, Your wealth, your relationship, your faith will go from 450 trillion to 20 quadrillion. It's just inevitable. That's just how the laws of the universe work.
Yeah, that's I knew we'd end up going deep, or I figured we'd end up going deep in the financial side of things. I didn't think we would get like so philosophically deep so fast. I love it, Curtis. I appreciate it. It's when you
Don't tease me.
yeah, yeah. When you say when we can't even wrap our heads around what $450 trillion is, right? I mean, I can't. And to think that we can't just have the tiniest little sliver of that and it completely change everything, like it wouldn't make it was not a blip in a $450 trillion bucket. Is me having a million, a few million, $50 million is nothing in $450 trillion in that. So that's insane. And we should all be striving to just take a piece of that pie and be doing what you're saying is just like little things every day. I never thought about it, or I haven't, at least with the faith and with the relationship. Like we'd say 1%, get 1% better every day in your personal growth, in your health, in your finances. But it applies to all of it.
Yeah, and when people say that I get 1% better every day, I'm kind of, I guess, maybe the more practical side of that. That's impossible. 1% per day is too much, because
Yeah.
you'd be doubling every 3 months basically,
Yeah.
and that's just too aggressive. You need to just be literally taking the tiniest step forward. And the phenomenon of compounding, and getting all philosophy on you, philosophical, is
Yeah.
that the key to wealth, and the key to health, and the key to relationships, and the key to faith, and everything you want in your life, anything you want in your life, the number one goal to get it is to not go backwards. Avoid at all costs. And sometimes we can't avoid, it's going to happen inevitably, but don't take steps backwards. Just keep taking tiny little sliver steps forward. And all of a sudden you're doing these various little things. And I always say, find one thing in your life you want to do better, because everyone always writes their goals down, right? Who has their goal and they write like 5 or 6 or 10 or 15 or 30 goals down? No. You write one thing down and go do it for 1 week or 2 weeks until it just has become part of your life and you do it every single day. Then add a second to that, and then a third and a fourth. And yes, the process is slow, but you will look back in 1 year and be like, holy crap, my life is completely different by making one tiny little decision. And it's so powerful. We'll talk a little bit more about my health journey and my wealth journey and all the stuff. But my number one mission in my life, my voice, is that slow and steady always wins the race. It's not as exciting. It's not as fascinating. You don't get all like energized by it, but it does bring something that nothing else brings. And that is confidence and security. And that is what we're actually seeking, this freedom, that this moment of, I have nothing that is holding me down. I am free to make decisions. And that is through slow and steady.
Yeah. And we oftentimes want to make these drastic changes immediately, and it can lead to burnout, or like we were talking, I think prior to going live, as injury. Like you go lift really hard for one day and then you're injured. Yeah, exactly. That's right. I'm not sure F the one, but that's what we're talking about. We're kind of skirting around it at the moment, talking about it. Infinite banking. You talked about financial leverage here early on, and I want to make sure that everybody's understanding, how do we get financial leverage as somebody that doesn't have, maybe a portfolio of houses that we could go collateralize against, or a bank account that we can say, hey, I got millions of dollars in this bank account right now. How do we start to get that financial leverage where I can go use other people's money, OPM, to be investing?
Yeah, the number one rule of wealth, and the single most important financial decision you can make, is it comes from the book, The Richest Man in Babylon. If you've never read The Richest Man in Babylon, I highly recommend. That's my favorite book. I try to read it once a year. And every time I read it, it's like different to me. Like, I don't remember that part. That is so cool. The number one rule of wealth is pay yourself first, meaning start somewhere. You've got to start. And right now, inside of we'll call it my infinite bank, or my strategy that, we'll talk a little bit about, I have $5.9 million. And it took me 7 years to get there, 11 total, but 7 really focused. But I started saving $1,000 a month 11 years ago. That's all it was. And some people can save 500, some people can save 300, some people can save whatever that number is. Start saving something today. And I didn't get very much built up for 5 or 6 years. Then finally I'm at like 50,000 or 60,000 after a long period of time. Who was willing to go through that process of building that foundation? I always like kind of compare it to a skyscraper. You want to build a building that's more than one story. What do? You got to dig a hole. You got to put in some footings. You got to pour the concrete. You got to let it dry for 30 days before you start putting any pressure on it. But once it dries and it's settled, now you can go up, and you can go up fast. And so there's this concept called infinite banking, where it's got a triple compound or a triple arm strategy. And it's what I personally use. And, a lot of people, Pace Morby and a lot of other people on the investing community, where you just start saving somewhere. We like to use a low-cost life insurance policy because of various really great strategies inside of them, or features and benefits it's guaranteed to never lose. It never goes backwards. So now we're compounding. The growth is tax-free. We don't want to overpay on taxes. You can really, really suppress the expenses and commissions, unlike a lot of other strategies out there inside of life insurance. And you have this glorified savings account, basically, that's making up to 10% interest per year without the risk of the market. And so I just started putting money there, and everything's all good. Life is good. And I built up where I'm about, $30,000, $40,000, $50,000 after a couple of years. Well, also inside of life insurance, you have this line of credit, basically, where you can borrow against your cash value, kind of like a house. You go get a HELOC on it or something like that. Life insurance allows you to do the exact same thing with no credit checks, no underwriting, no financial anything. You have a 1-to-1 ratio, basically. And so when you have that 1-to-1 ratio, you have someone else's money available equal to whatever you're willing to save. Now you've double the money working for you. Yeah. That's really cool. So now you can make interest off of your money. You can make interest off of someone else's money. And what did that do to your compounding? Accelerated it. You have additional things that are bringing you wealth. And then inside the MPI strategy, we found a way to triple that. So you have your money, their money, and then additional money on top of that. And when you're triple compounding, in my life, like I said, in my exact scenario, 11 years ago, I started with $1,000 a month, and then business is doing well. Life is going. So I raised it, and then I raised it, and investments are working out. And I've got a very, very detailed strategy on never lose. That is the number one goal, is to never lose and keep moving forward. And 11 years later, there's $5.9 million in there. And I'm not saying that's going to happen to everyone, but to have $1 million saved up in less than 10, 15 years is doable by every single person who dedicates to the number one rule, wealth. Pay yourself first starting today, and then let the system do its business.
Yeah. There's something that we started doing a long time ago when I was at a W-2, when I was employed by somebody else, which was have it auto draft. And I don't have it auto draft to a savings account or whatever that is going to be paying myself first. It's like I didn't even earn, that wasn't even part of my paycheck almost. It was just whatever the number was, I made $5,000, but I only saw 4,200 of it into my accounts. And that helped me save really early on. It was just a set it and forget it. I don't even have to think about it. And then all of a sudden, this is before I understood investing or anything. It was just hey, you should be saving some money. Set it aside. Don't even allow it to come into your bank account. That's what worked for me. And I love the Richest Man in Babylon book. As soon as a child can start to understand the concepts inside that book, they should be reading it.
Yeah, and I always tell people in 2008, if you're old enough to understand what happened in 2008, I was mid-20s, so I was right in the middle of it with my first career and things like that. That someone who was making, say, $75,000 a year, and then 2008 happens, and tons of people got laid off. Other people had to go from 75 to 65 or 50 to 45 or whatever else, and nothing really changed that much. Our kids still played soccer. We still went on a family vacation. Maybe we ate at home a little bit more. We spent a little more time at the park instead of at, Disneyland or whatever else. But the same memories and the same great energy and everything in life just was the same, even making a little bit less. And so I try to tell people, even if you're living paycheck to paycheck, pay yourself first. You'll figure it out. We always figure it out. Human beings are great at saying, okay, I live paycheck to paycheck on 60,000 a year. Like you just said, if you only had 54, you would be just fine. You'd still live paycheck to paycheck, feel the exact same amount of stresses, maybe less stress, who knows? But now you have $6,000 compounding for you. And then it turns into 12 and 18 and 25. And then all of a sudden now you have enough money where you can start infinite banking. You can start triple compounding. And before you know it, 7, 8, 9, 10 years later, you got $500,000 in there. And now you have access to things that were not available to everyday people who didn't have a little bit. But it all starts with that first step. Take that step today. Pay yourself first, 10% of what you're making, and then let compounding do all the heavy lifting.
And you'll have to read the rest of Richest Man of Babylon to get the rest. But it's like that, and don't lose it. Give it to somebody who knows. Learn, or give it to somebody who knows what the heck they're doing. I want to get to at what point you can start to get the leverage. Why would somebody even loan to you? But before that, I'm saying these just so I remember them.
Yep.
You've said a couple times now, don't go backwards. The product that you use in your strategy cannot go backwards, essentially. Right? How does that work?
100% guaranteed to have no risk in losing money in the market.
Yeah, like how does that work? And then, but you also mentioned, and you say it so fast. A lot of the guests that come on to Networking with Nathaniel just like blow right through them because they're so used to them. You said it. I think you mentioned 10%. There's a cap there, so there is even if just correct me here. Like even if the market were to go up 20% this year, I don't make 20%. I only make 10%. But if the market were to go down 12%, I don't lose 12%. I just don't make any money. I don't get any interest on my money.
Yes.
That's all correct. Okay.
And so basically a traditional investment will be like negative 40% like 2008 and positive 30% like 2010 or whatever year it was. And that's kind of the range of traditional investments, whether it's real estate, whether it's whatever. You have high and lows. They just did this peak and valleys, and it's just this roller coaster. We call it the roller coaster of investing, right? It goes up and down, and that causes a lot of stress for people. That has people losing sleep at night. The market plummets. I mean, the saddest thing I ever heard, one of the saddest things I've ever heard, is that people in 2008 actually unalived themselves because of the stress they felt by losing 50% of their portfolio, or the Bernie Madoff situation. And it's like, wow, money is that much control and power of your feelings and frustration. So what we did is we said, hey, let's remove the risk. Yeah, we don't have quite as much home run potential, but instead of being this, let's bring it to this. And now it's slow and steady and compounding rather than peaks and valleys. And we discovered, which is the craziest thing ever, it's such a simple math concept and equation, that this with less risk and continually moving upwards can be a better long-term result than the craziness of the excitement of hitting big and losing big and all that other crazy stuff. So I want to bring confidence and security of, hey, no risk in losing money in the market, and then a little bit less upside actually is better for you long term than the craziness of the market.
Yeah, than the craziness. And you have, like, you show graphs and everything, which I'm sure are available on your social medias, which let's just plug up right here. What's the best place for people to get more from you on, especially on the financial topics?
Yeah, the best thing, I actually have this book right here. I will give a free copy to every single person who wants one. Everyone Ends Up Poor. I break down the simplicity of money because I believe money, when you understand the rules, is the easiest game to play. So have you ever played like a card game where you walk in, your friends are playing a card game or whatever, and you have no clue what's going on? Like, even something as simple as like Scum or Rook or something. You have no idea what's going on.
I don't even know what those are.
Yeah.
Oh, yeah.
Fun games. But so if you came and played, you have no clue what we're doing.
Yeah.
How many hands does it take before you get what's going on? maybe 2,
Yeah.
3. After 5 or 10 minutes of watching it play, you know how to play that game. Uno, exactly, Uno.
Yeah.
And so this book, I think, is kind of a great, just a playbook on here's the simplicity of money. Now you
Mhm.
know the rules. Now you can play the rules. You can play the game correctly. And so anyone who would like a free copy, ebook and audiobook, no strings attached. I want to give you Everyone Ends Up Poor, Why Retirement Planning is All Backwards and How You Fix It. If you text me the word book, BOOK, to the number 20500, 2500, 20500. I'll send it directly, the download to your phone, ebook, audiobook. It's 110 pages. It takes less than 4 hours to read. And I'll
Yeah,
believe
really.
outside of The Richest Man in Babylon, this might be the second most simple book to read about finance and why around 99% of the American population in the most abundant country in the world still end up downsizing, not where they expected to be in retirement. And it's all
Yeah.
because of one tiny simple concept: the difference between investing, which has risk, and compounding, which is slow and steady. Embrace the slow and steady, and you don't end up poor. And it's a pretty simple game to play. So text book to the number 20500.
Yeah, if you didn't get that again here, I'll put it in the chat. It'll also be in the show notes. Um, book to whoop. Okay, well, 20500. I hope so. I read the book right after we met. I got it. You didn't sign it, so I donated it. No, I'm just,
Next time we
I
meet,
read
I'll
it,
sign it.
and I hope this was okay. Because I did donate it. I just thought, you know what? I read it and I got a lot of value out of it. And then I like in the sense of kind of paying it forward, I didn't have anybody specifically like, oh, you should read this book. I just thought I'm gonna go donate it and hopefully it finds its way into the right hands. Right. That was my thought at least.
That's great. Someone will
Yeah.
pick it up.
Why? So we I guess at what point do we get the ability to go to I forget Omaha Bank, I think, is the bank that you guys get the leverage from. At what point does Omaha Bank go, okay, this is worth our time, this is worth our money, or I have enough built up to be able to get their leverage?
Yeah. So what's great about these strategies is they have guarantees you can't lose. And how they do that is a thing called insurance. Why do you have insurance on your home, your car, your wedding ring, your baseball cards, your business? We insure every single thing we deem valuable in our life,
Mm,
except for money. It's kind of the strangest concept. We believe in no risk, no reward in money, but every other thing that we care about in our life, our relationship, our health, our house, our car, everything, we put insurance on just in case there were a bad day. Well, so we came up with this concept that, like, what if we put insurance on our money? Yeah, it costs a little bit of money to buy insurance. It's not free. But if you now have something that guarantees that you can't lose, whenever there's a bad day, it freezes your account. You've got no loss potential.
mm,
Once you do that, all of a sudden, a lot of things are available to you. Banks will loan against it. Insurance companies will loan against it. People will say, hey, that's a guaranteed asset. It's not going to lose. So now it's very easy to then go get lines of credit against it, similar to a house, but a house has lots of
mm,
restrictions. But starting someone who's saving a lot, we have a lot of clients that will put in a lump sum. They'll say, hey, I got 30,000 saved up. I got 10,000. I got 100,000. Those people have access to this line of credit pretty much immediately. They've got a lot of liquidity inside the account. Someone who starts off at $500 a month, $1,000 a month, whatever, it typically takes 1 to 2 years before you have enough liquidity in there that a bank or an insurance company will now begin to leverage against it. But when that moment happens, what happens is really cool with money. Your money is inside something making compound interest. It's not losing, it's growing. And that will double every 7 to 10 years, like I said. That's just the
mm,
normal order of money. It'll double every 7 to 10 years on average. Starting the second or third year, depending on how much money you're saving, the insurance company or bank is willing to add money to your policy, to your account. This is not your money to keep because it has the guarantee it can't lose. It's still their money. But what they say is basically, hey, that's our money. You get to keep any interest it earns because you're our
mhm.
client or whatever else. And so now you have your money making interest their money spilling interest into your account. And now you've just cut that 7 to 10 years down to 6 to 7 years. Oh, my kids are going to love that one. And it just gets faster and faster. And the more you leverage, the more you triple compound, the more you infinite bank, it just gets where sometimes you're doubling every 3, 4, 5 years. And now wealth becomes very fast. And I tell people what's crazy is my account right now is 5.9 million in it. And of that 5.9 million, I've personally saved about 3 or 4 million in the last 11 years. So I've made $2 to $2.5 million in the last 11 years. This year alone, through the power of compounding, not even really anything that I'm doing anything that special, but just through the power of compounding, my account's projected to make $2.2 million. I'm going to make as much interest in the 11th year of all the other 10 years combined. And that's the power of making good, simple decisions over and over. It gets faster and faster and faster on its own, the benefits and the features and all that other great stuff, that all you have to do is start. That's like the one I just want to pound on people is like, just start today. Because yes, it may take 10 years to get there, but you will get there and look back and be like, it worked, because it always works.
The first however many years, like 3 to 5, it's so tough. And it's not just in the finance, it's with all of it, like the health, the relationships, the faith. We want this.
Yeah.
we want the I'm going to make as much this year as I did the last 7 years combined, but we're not willing to go through those first, where it was just like, it was basically me just contributing, knowing that eventually I was going to get to that. But there was not a whole lot of that at the beginning. It's slow going.
You had to build that foundation. You had to dig the hole, pour the concrete, put in the rebar, let it dry out. And then now we're ready to do some really, really cool things. And
now
people
I started growing on it. There was something that you mentioned there with some people that put in a lump sum, which is interesting from a real estate investing standpoint. Is like sometimes we get big chunks of money in, but we may not have the monthly cash flow to make these $1,000, $2,000 contributions. I could go, I flipped a house and I made 50 grand. Here's my lump sum. Is that like, I still need to make monthly contributions though? Is that correct?
You don't need to. Everything's a pay yourself first. The more you do, the faster it works. And so we all have our goals, right? We all want this. And the more you do, it's just better. My wife the other day said something. I had that proud teacher moment, not so much husband-wife moment, but as a proud teacher moment, that I was showing her this compound interest graph, that if you save $500 a month, by year 5, it'd be worth this much, by year 10, 15, 20, and so on and so forth. And at year 7, there was like, I don't know, $65,000 in the account. And she asked me this. She goes, Curtis, so are you saying if I just dropped in 65,000 in the first year, I would bypass the first 7 years of compounding? Yeah. I was like, yes, that's exactly how it works. You have goals, and there's an easy way to mathematically see it. It's just a pure equation. So you can literally just look at it and kind of get a good idea what's going to happen. But for her mind, who's not very, she always says, I struggle with math. I don't really understand math. And unfortunately, that is an epidemic we have in the finance industry, that everyone in the world says, oh, I just don't understand math. No, you just have never been taught math. Because math is really simple, but to know that you sell your home, you sell a rental, you flip a house, whatever, and you can drop in 50 grand, 100 grand. I had someone this is just a little side story, someone who was 52 years old, no retirement at all, stressed out, worrying, the whole 9 yards, came to me, almost broke down, that like, I've been successful, I've run businesses, and I have nothing to show for it. I'm 52. It's too late. I'm screwed. And he had to make a hard decision. And this decision's not for everyone, but he had a home that was nearly paid off, had about $400,000 of equity in this home. And his kids were all grown and out of the house and stuff like that. And he goes, what can I do? And I'm like, sell your home. And he's like, what? I'm like, do you really need a 4,000 square foot house? You've got no kids. And I get it. You raised, it's your home, all this stuff, but there's something exciting about moving. Like, it sucks to move, but once you get into a new house, you're like, it's new. Like, I like
Yes,
it. Right.
yeah,
And he ended up selling his house, and he could drop in $400,000 and put in $1,000 a month. And by 62 years old, in 10 years, was projected to have $1.2 million in his compound interest strategy and a retirement of 120 something thousand tax free for the rest of his life. It only took 10 years and on one decision to sell a home.
yeah,
And that works at a 25-year-old. You're a 30-year-old right now, and you have a house, and you got, that crazy 2020, 2022 appreciation. You got a couple $100,000 in your house. You might want to consider selling it if you want to be financially free in the next 10 to 15 years. Like,
yeah.
there are just so many ways that more money inside of a compound strategy, all it did is you bypass time. That is the one way to bypass time.
Yeah. And the ability to jump that 5 years, but also to know that even at 51, like, I don't want to say it's not too late, because that's just so black and white, but almost like it's not too late. Like, there are, of course, circumstances where they're like, sorry, I don't know. You don't have a house that you can sell or something like that, right?
Or I
But
want to save $100 a month and I'm 51. Doesn't work that way. It's
yeah.
not
It's gonna be tough.
magic.
Yeah, right. I agree with you. Blovato Unlimited. Oh, you changed your name. It was different earlier. I recognize the same picture though. Yeah, it's a tough, but if you want the result, sometimes you got to make those tough decisions. Um, you mentioned there's something right there, right at the end, that they're going to have $120,000 a year for the rest of their life tax free. Would you explain what the heck you mean by that for everybody
Yeah.
else? I
So
mean,
a great strategy allows you to live on passive income, whether it's real estate rentals or whatever else. Insurance just does it a little bit nicer. This infinite bank does it a little bit nicer because it's tax free, it's secure, and it's liquid and all that other fun stuff. But the goal is to build the asset. Your job is to build the asset. That is to save money, let compound interest do its business. It's growing, everything's happening. The day that your asset is big enough to begin to pay you, the goal is that, hey, let's just say you're making 10% interest and you get $1 million in this account. That means your account is making you around $100,000 of interest per year. So if you just live off the interest, the asset stays the same. So it's $1 million. It's making it 10% or $100,000. You live off that 100,000. The next year it makes 100,000 again. Live off that, 100,000 again, live off that. And so your asset never goes down and it just keeps paying you. You built it on the front side. You pay into it on the front side. It then pays you on the back side infinitely, basically. It will last for however long. So it allows for you to retire at 30, at 40 or 50. There's no like, oh, it will only last for 20 years or 30 years, because if you're only spending the interest that it earns, which ends up being somewhere around 10% on average, then now you can just live off of that for 50 years or 100 years. Or if you put it inside of a dynasty trust, you build a family plan, all of a sudden it's not only paying you, it's paying your kids, your grandkids, your great grandkids, and provide a path to generational wealth on one single decision of starting to build a compound interest account today.
and that's why so many of us do what we do in the first place, is so we have that something to pass down. Well, if you haven't taken the time to do it, there's not going to be anything to pass down. I,
Yep.
I don't know what else we can touch here that I just want to make sure that everybody's really understanding, that's here live and in the future, what we're talking about. I have a curious question, and you answered at least one part of it, with somebody that's going to come in and lend against the account, or not against the account, but is going to put money into the account where we gain interest off of it. They're coming in, the institution, because there's no downside to it. They're like, their money is secure. But how do they, like, what's the upside for them? Because it's 10%. Can't they go do better? Or like, what's their incentive, I guess?
Yeah. So an insurance company typically has their money invested in AAA corporate bonds. They by law have to be, they're an insurance company. They're not an investing company. So their
Mm,
job is to protect money at all costs. They don't lose and they just keep moving forward. And so historically they make, by doing that type of mentality of I'm not going to lose and I'm just going to compound and I'm never going to put my money at, any type of, normal risk of the market, I'm going to make around 5%.
Okay.
And they've done that for 100 straight years and they don't lose and life is great. And so what they say is, hey, because you're our client, because we're partners in on this deal, you're our client, you've set up an account with us, we will allow you access to our account, our money, our $50 billion that we have in this 5% yielding bond or whatever it is. And you can have access to it at 5%. We net nothing from it, but it gives our clients an advantage. We get the exact same. So whether our money's in the AAA corporate bond or we lend it to you at 5%, it's the exact same for us, but our clients are super happy. They have access to this tool, this leverage tool of wealth. We then take that 5% line of credit, or, they call it an index loan, and we go put it inside the strategy. There's a 0% floor up to 10% growth. And so now we're making up to 5%. They're making 5%. We're making up to 5% on their money.
Mm-hmm.
So they're totally cool with doing it because they're protected, their money is secure, and they're getting 5%. But now we have an opportunity of accelerating our compounding an additional 5%, which doesn't sound like a lot, but it literally is millions and millions of dollars of compound interest over a long period of time. And so it makes it that everyday Americans, you can save $500 a month. You are on a path to becoming a millionaire.
What happens on a year that just for extreme, it makes our account makes 0% interest. Like it was a negative year in the stock market and we're not going to make any. We still owe them the 5%, I'm assuming.
Kind of. So these plans are lifetime plans. So individual years don't really matter that much. We're just slow and steady wins this race. And so any interest that is owed ever is just deferred inside the account. It never, you never write a check to someone for, you don't need to write a check to someone for any interest. It just is all just compounding. Some years, you don't make any money. Some years you owe the 5%, but it's just an IOU in the future. And then long-term, one day we're all going to pass away at 90 years old, 100 years old, or whatever the age that is. And any of this leverage that we used from their account and any interest that had accumulated over that period of time now is paid back to them, and all the remaining interest plus any of your money and interest goes to your beneficiaries, your death benefit. And so it's a super cool system of just, hey, we're in this for the next 30 to 50 to 100 years. And it just long-term, when you play out the math equation, that extra couple percent interest is just so powerful to help everyday Americans create wealth by using leverage securely. And that's a very rare thing because most people use leverage and they blow up in 2008. Well, we've created a fail safe. Like, no, even leverage doesn't blow up even in a 2008 now.
Yeah. It's like a due on sale kind of. It's not like when you sell the property, you owe us the money. We got to, this is true. Like, doesn't that expire? I'm not exactly sure what the question is here, Curtis. Do you understand that?
Yeah. So there are a lot of people don't realize that there are multiple types of insurance. Most people, like a Dave Ramsey or someone, will be like, hey, buy term, invest the rest. And so they go buy a term policy that expires in 20 or 30 years, and then you lose your generational wealth aspect. Like, I don't understand term insurance. Term insurance is poor people insurance. Like, I can't afford something that actually works, so I'm going to go buy term insurance, which, okay, it is what it is. And then they go invest somewhere with risk. They invest somewhere with problems. They invest somewhere with taxation because it's exciting and you can make these home runs. And so the whole, like, why this is called why financial planning is all backwards and how to fix it is because we are so manipulated with money that no risk, no reward is the solution to becoming wealthy. But like I said, in the golden ticket and stuff like that, what if your relationship coach told you, you need to put your relationship at risk to have a great relationship? Hey, you need to put your faith at risk to have faith in God. You need to put your kids at risk. You need to put your body at risk to have great health. Any of those topics, you'd be like, that's the dumbest thing I've ever heard in my life, right? But somehow we've been tricked in believing by this financial community that makes tons of management fees and tons of just all types of things and a bunch of cop-outs, because every time the market does blow up, what do they say? it was an investment. You knew there was risk involved.
Yeah. Yeah.
And then
At
they
the end
all
of
end up
every commercial, you know? Yeah.
exactly, right?
Yeah.
And that is why 99%, give or take, of the American population, who is even the ones saving money and have 401ks and IRAs, still end up downsizing and wondering why they didn't end up in the financial position they expected. And so, once again, take 4 hours, read Everyone Ends Up Poor. I'll give you a free copy. I believe
Yeah.
you'll learn so much. Text the word book to 20500. I'll send you a free ebook and audiobook right now.
It's brilliant. So we're getting closer to the end of the hour than I expected. We've hit a lot here.
So
And
let me add this one last thing.
okay,
If
go. Yeah.
anyone who I know I'm kind of super high level and you want me to get into like how it actually works. And what I prefer is that just be a one-on-one strategy, because that's a lot of those questions are hard to answer without knowing what your goals are. Everyone
Yeah.
has different goals, whether it's generational wealth, whether it's tax-free retirement income, whether it's infinite banking. Those are all different goals. So I want to just give an invitation that anyone who would like to schedule a complimentary one-on-one, no strings attached, just to review your goals, build, answer all your questions, really go over these things, but in depth. Feel free to reach out to me on Instagram or text me right now the word MPI to the number 20500. I'll send you our calendar, schedule complimentary one-on-one. I am 100% confident in that 1 hour one-on-one, you'll learn more about risk, reward, tax-free, infinite banking, things that actually build wealth securely for everyday Americans than just watching some Instagram reels or going and getting a low-cost index fund or something like that.
I can attest to that, Curtis. I had one of those one-on-ones, and what I want to say too is that I don't know how the consultant gets paid or whatever. That doesn't matter to me. I want everybody to make money. I went into the call thinking we were going to do something, and he actually recommended us not doing it because it would have adversely affected some of our tax planning. And it involved a 401k, and we were like, it's doing all right, but we want to get more into our account with you guys. And he was like, oh, I wouldn't do that. You're going to take a big hit. Like, it's not going to be worth it. Keep it over there. And it was just, it was one of those things where he could have brought more money into the account, and I don't think that you guys get paid based on how much money that comes in, but he was just like, it seemed like he had our best interest at heart, whether that meant doing more here or keeping what we had there. So I just wanted to throw that out. That's like a anecdotal review, if you will.
Yeah, and that's what's great about the rules of money is they're so objective.
Yeah.
And so when someone comes in with me with their goals and where their money is, I don't really have to think about what I'm going to recommend, because there is the best way, which is, avoid taxes, lowest fees, how you get secure, how do you maximize your leverage. And if you mix it all together with one plan for you and your family, then all of a sudden, hey, here's the plan. Yeah, don't go outside of that, because it's has a negative effect on you. Although it'd make me more money or whatever, that's bad for you. So I would never suggest something like that. Always do what's right by the client and give them the objective nature of, this is what mathematically and securely and tax advantage is your best option. Then ultimately you choose what you want to do, but you start making those type of give those type of services to the public, then people start trusting you. And then now you build a really great business of, hey, they're the ones who are going to take care of you. And that's what we tried to build.
That's exactly right. And I love that. Math doesn't lie. It can't. It's a law. But we started actually talking about health. We started this, and then I wanted to make sure we cover this, because this is a very important and dense topic that a lot of people outside of really that, I don't know how I would have found out about this if it wasn't for Sub 2. I probably wouldn't have. Let's just say that. So I appreciate you coming on and talking about this. But you have been, health has been a part. Athleticism has been a part of your life for a long time. If I looked at the notes, you were an athlete, a high level athlete. Can you tell me a bit about that, Curtis? Like,
Yeah, I was a 3-sport athlete in high school, cross country, wrestling, and track. I also played football on the side, basketball. Like, if it's a sport, I enjoy it most likely.
Yeah.
I still haven't gotten to pickleball. Sorry, my pickleball friends. I just, my friends all play it 6 days a week, like
Oh,
twice a
really?
day. And I'm like, I'm too cool for that still. Like, I'm not old enough to play pickleball quite yet. My dad plays all the time. But then I end up wrestling at Arizona State University. So D1 college, full on wrestling. Unfortunately, I broke both my ankles my redshirt sophomore year. That same year I got married. That same year my wife got pregnant. That same year I started my first business. And the semifinals of the Pac-10s, I broke my right ankle, and my left ankle was completely taped up. Like I'd injured it, and I had it like casted. And then I'm wrestling, and 15 seconds in the match, I hear this snap, crackle, pop, and I say, that is impossible. I have it so wrapped up, and I look down, and it's my other ankle. And I'm like, no way. Are you
Yeah.
kidding me? Flew home from Pac-10s. I believe it was at Stanford, if I remember correctly. And I walked into my wife and I said, I'm done wrestling. I'm going to focus on our family and the business and stuff like that. I didn't even finish the semester. I didn't even go back to class, didn't finish the
What?
semester, just straight on. I am now a business and family man. That's what I'm doing. And, I don't
Yeah.
regret that decision at all. And so sports have always been a huge part of my life. I end up, doing a few UFC fights, ASU, you got the Ryan Baders, Cain Velasquez, CB Dolloways, all those people that we all wrestled together at ASU. So it's like, oh, obviously I got to go do some fights, but I'm not
Yeah.
the person who gets overly excited. So when I win, I don't jump up on the cage and pound my chest, and my neck hurts the next day, and all types of, I got home and I'm
Yeah.
like, I just wasn't meant to fight. I'm
Yeah.
not a fighter. Like, I don't really enjoy it that much. Not that I didn't not enjoy it, but it was just like, it doesn't excite me. It doesn't bring me value that maybe it does other people. And so I went all in on business, 20 years of just business and making money and making babies, and life is gay, but life is really good. But I noticed that I had no six pack anymore. I was soft. I got winded doing anything. I was, I was about 15 pounds heavier than what I was expecting to be. My kids would make fun of me that I was pudgy. And what would I do? I would go work out one day. I'd go to wrestling practice one day. I would go to the gym one day. I would go running 3 or 4 miles one day. And then I'm ridiculously sore, or
Mm.
I'm hurt, or something happens. And I'm just like, I can't go back for another week. But by that time that week happens, I've already forgot, like, and then I'm busy and I'm tired. And this happens for 20 years.
Yeah.
Work out for a day or two and then off for a month. Work out for a day or two, off for a month because injury and sore and whatever else that happens. And I ended up having this back surgery 3 years ago. And it was one of the most complicated 6 months of my life. I don't remember it very much. So I can't, it's only 3 years ago, but I don't really remember very much because I was so heavily white pills, like
Yeah.
crazy type of pain. I developed complex regional pain syndrome. If anyone knows what that is, it's one of the most severe nerve pain you can feel, to the degree that like I felt depressed for the first time in my life. I felt where, I could end my life and it was probably the best decision. Like, there was that much pain involved. And so I've become very open-minded and understanding to people who are in pain. Like, if you are in pain, that is it is just something that's unbearable sometimes and unbelievable. So I want to have this message of remove pain from your life, whether it's
Mm.
financial stress, whether it's physical stress, whether it's relational stress, whatever that pain, you got to find solutions to that, because that's what's dragging you down. But after I finally got through it, 6 months of just insanity, and then finally I got a little bit of relief from doing some other type of procedures, I said, I want to get back in where I feel healthy again. I feel really gross right now. I got to detox. I got to go through that whole process. And I said, you know what? If slow and steady wins the race in money, what if I applied that same idea and concept
Yeah.
to getting back to where I feel great? how do you feel the best of the best of the best? It is not working out 8 hours a day. It is not extreme dieting where you're taking in 300 calories and you're just angry all the time.
Yeah.
That's a plug-in for my wife if she listens to this. She likes to go on
Uh-oh.
those. And I make fun of her. I can tell. I walk in, I'm like, oh crap, are you on a diet right now?
Yeah.
But how you get there, drink a little bit more water today. Intake a little bit less sugar, not zero sugar, because if you go zero sugar, you're going to hate life for a while and you'll probably break. And then you're just, you relapse and stuff like that. Take a little bit less sugar, drink a little bit more water, go on a 2-mile walk today, which everyone can do that. Get to bed earlier and those simple things, eat a little bit less fat or drink less alcohol or whatever. And just do that, because all those things I just said, every single human being can do. We can all do that, and you won't feel like crap the next day. You'll feel maybe even a little bit better. And so do that for a week. And then what happens? The craziest thing happened. I started intaking a little bit less sugar, and I replaced Gatorade, which I was drinking all the time, probably 100 ounces a day of Gatorade. And I replaced it with Ultima or 0 calorie Propel or whatever else. And all of a sudden, about 2 or 3 weeks, my desire to drink sugary drinks completely went away. I don't even drink them anymore. Every now and then I'll grab a soda if it's just like, oh, that looks good. And then I'll drink it and I'll be like, oh, that is really good. But I don't have a desire to go then drink it again the next day. It's a that's good, not I need that, like a lot of people feel. And so I just said, I'm going to start doing this slow and steady. And then I hired this coach. And I said, I want to start running, but I can't run by myself. Like I just can't do it. Like if I have to think about it, make the decision, get up, or running at night's impossible because I'm already tired. I said, I need you to send me a schedule Monday through Saturday, every day, how far I'm supposed to run, how fast I'm supposed to run, how many push-ups I'm supposed to do. I mean, give me the exact formula and I can do that.
Yeah.
And it has now been 2 years and I've not missed a single day. Not a single day, because I already know what I'm going to do. He sends it to me every Sunday afternoon. I look at it, I screenshot it, put it in my phone, and I said, okay. I wake up every single morning, I go running. And now it started off as 2 miles, 3 miles, things I could do. And now I'm running 8 miles, 12 miles, 14 miles, and training for my first marathon in February. So it took 2 years to get here. And every single person, if you're listening right now, make one little good decision today and keep doing it. And then add a second, add a third, add a fourth. And in 2 years from today, you will be in the best health you've been in your whole life.
Yeah. There's the compounding aspect here, like we talked about prior in the finances, is what it's all about. And having you don't start running a marathon, right? And some people, it might not even be after 2 years. That might be too soon. If you're starting from a place where just walking that 2 miles is really difficult, you start by walking a mile, and then eventually maybe you only walk half of it and you can jog the next half, right? And you slowly compound that over time. I love that. It's just, don't go all in with anything. With exception, probably, because you get burned out.
Because you get burned out. And we've all watched that show. What was it called? Was it Extreme Makeover, or what was the one where the people would maybe weigh 400 or 500 pounds, and it's here in Phoenix, and they would take them and starve them for 90 days, and they'd lose 100 or 200 pounds or whatever else, and then they go back a year later and they've all gained it. Like they gained it back, if not more. And the reason being is because they never enjoyed it. They never enjoyed the process. When you go slow and steady and you're just adding things that make you feel better. I feel better eating less sugar in my life, even though I love sugar. I love it. And I feel better drinking less soda, and I feel better running every day. And I feel better when you do little things that make you feel better. It now becomes a lifestyle. It becomes a mindset. And then you continue on with it because there's no reason not to continue on, because it actually makes me a better person. And so I like to say, hey, find those things in your life and just take a little tiny step forward. And then all of a sudden you're like, okay, I can do that. where the extreme dieting and working out for 8 hours a day and getting super sore and sick and all that other stuff, you're not enjoying it. You don't even like the process itself. And the moment something comes up like, oh, I'm busy, I have to go on vacation, I have to this, or I'm injured, it all goes to naught and you're exactly back where you were, if not in a worse position, because you remember how much you hated the previous thing. And so, man, slow and steady wins this race.
It does. And like the 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 cliche, it's not about the destination, it's about the journey, applies here. It's like you're becoming the person that can run a marathon, right? I like to equate it with the lottery winners. They win this big sum of money, and then within 2 or 3 years, it's all gone because they didn't develop the habits. They didn't become the person that has that money. They just got this lump sum. And I want to make sure we're good on. We're running out of time here, Curtis. You did mention something that I think you brushed over with your coach that just hands you a plan and you just go execute the plan. A lot of the times I run into people that they go to the gym and then they go, okay, what am I going to do today? And like,
Which is
the bench
impossible.
open, I'll go do bench.
It's impossible.
Yeah, you should be planning it the night before. Like, this is what I got at the very least the night before, right? So you lay your clothes out that you're going to go to the gym with in the morning. So it's ready for you. You just get up and you go, and all you have to do is go execute the plan. If you don't have the means to hire a coach, coach yourself, put it in place, and then just all you have to do is get up in the morning and go execute it. Like, that's such a key thing for us to be able to go achieve the things we want. Okay, as we're running out of time here, would you plug your socials again there, Curtis? I know you got the book.
Yeah, I'm gonna before we do, I'm gonna have to say one last thing on that.
Okay, go. Yeah.
So there are so many people in this world who get fulfillment and satisfaction by helping others. Like, it is not hard to find someone who will help you in your own journey. And so what I always recommend with coaching and stuff like that, yeah, I pay $75 a week, which is $300 a month, give or take, where this person helps me. And every time I'm unmotivated, I text them. He says, just get out there and do it. Like, quit being a baby, just go freaking do it. And then I go do it because I have hard days also. But find someone, if there's anything in your life you want to do, find someone who is really good at doing it already, who enjoys doing it. And I promise you, without fail, they will help you without even asking anything in return. You find someone who enjoys, like, I have people now who contact me on social media and say, Curtis, I want to cold plunge, or I want to water fast, and I want to run things that I'm doing, and I'm social about it. And I just help them. I don't even consider like charging them. I go, this is what I do. This is how I do it. Anything you need, let me know. One person asked me to write them a running plan. I literally just took the template that my coach gave me. I filled it in for them and I emailed it to them. And it took me like 10 minutes and I didn't even consider. So because I enjoy it, it's something I like to do. So find someone, if there's anything in your life you want to do, find someone who already does that doesn't think they're like super, oh, I'm so cool, I'm an influencer, pay me 10,000 or whatever, but someone who's just like your friend, family, coworker, whatever, and say, hey, I really want to do that too. Is there any tips, anything you can help me with? And I promise you they will help you, and they ask nothing in return, but tell them about your journey. And then you become a support group, you become a community, and all of a sudden it becomes a lifestyle. And that will be absolutely life-changing. Anything you want in your life, follow that rule.
Appreciate you. Okay, I've asked these questions to everybody we're going to jam them out here within the next couple minutes. What is your biggest life lesson you learned, Curtis? How did you learn it?
Yeah, compounding is making little good decisions over and over and over. And if I can make little good decisions, it will always work out in my favor. And so find the good decisions. You don't need great decisions. You just need little good ones. And then you end up in a very amazing place.
Yeah, love it. I should have seen that one coming. If you could have dinner with anybody throughout history, living or past, who would it be? What would you want to talk about?
What's funny, in my second book, I talk about compounding yet again. And I believe there is an example of compounding that might be the single best example ever. And that is Tom Brady. Tom Brady is not the most athletic. He doesn't have the strongest arm. He's not the fastest, but what he does is good, simple things over and over and over. He watches the film. He does his diet. He works hard. He studies. He does everything. And what was the result? Better than anything that anyone's ever done ever. Yeah. And this is coming from someone who's not even the best athlete. in a sport that is required that you're super athletic. And so when I talk about that, I would have Tom Brady, I would have dinner with Tom Brady and talk to him about just life and compounding and how he did it. And that would be an amazing experience.
Yeah, that's pretty cool. He was an exceptional, like seeing his. Okay, we don't need to go into the Tom Brady story. His transformation from college to even just like 5 or 6, 7 years into his NFL, you're like, "Whoa, that's not the same person at all." Because yeah, he was
And
working
he only
hard.
got better as time went on because
Yeah,
compounding inevitably gets better.
yeah, that's great, and that's why you're able to go do it at 40 still when people aren't able to do it 22. Okay, when your time on this earth is done, Curtis, you're wherever you believe you go. What do you want to be remembered for by the people you left behind, besides compounding interest?
Yeah. That my family was so important to me, and that anyone can accomplish freedom if they dedicate just to things that matter. Like there are so many things in this world that don't matter. If you can't control it, then you shouldn't stress about it. There are very few things we can even control. So there are very few things we should even stress about. Your job is just to wake up, go do your business, make the good decisions, and everything else is just let it go. Anything you've already done, you're overweight, you're in debt, you're divorced, you're struggling in life. Guess what? Everything that you've already done has already happened. There's nothing you can do to change it. The only
Yeah,
thing you can do is control the decisions you make starting in this exact moment. Pay yourself first, whether it's your health, your wealth, your relationships, anything. Pay yourself first. Forget about all that shame and guilt and stupid stuff that people carry all the time. And it just for 100 years of their life, they're stressing about things they can't control or that have already happened. But today's a new day. And that's what I want people to remember. That's what I want to be remembered is that today is a new day. Start today and live the compounding life.
man. I appreciate you coming on, Curtis. If you would hang out just for a minute to make sure the recording gets completely uploaded, I'll be back in just a second here. Curtis Ray, everybody. Wow. As I'm wrapping the episode up, I'm so thinking how blessed I am to be able to talk to people like this man and all the other people that have come on the show, and how blessed you guys are to have hung out with us for this long and have heard all the things that he has to say about finances, about health, about relationships, about your faith. It all starts with small, simple daily actions. And don't go crazy with stuff. Just take one little step at a time, and the steps compound as it gets. It's the what is it? The eighth wonder of the world, Curtis. It compounds over time. So just take little steps every single day towards whatever goal you've set for yourself. I appreciate y'all for being here. If you're not already subscribed to the channel, please subscribe so we can continue giving you guys value. Hit that like button. It helps reach the video out to more people. Until next Wednesday, it will be a recorded episode because I will be traveling later.